Today I want to ask you how your year's been, and if you've had any big wins or any big losses in the year from a personal and, much larger level.
Hi Paul, hi Steve, Happy New Year. Welcome to episode 100, everybody. I guess that means we get to walk around with our bat in the air, right, Steve, at this sort of point, because we've made it up to 100. The cricket reference, Paul. That's why I said Steve, really. But it's been a decent year in a number of ways, actually. I guess when I think about sort of how I set out to approach this year, I wanted to kind of achieve a couple of things, or a few things, and there's one that I think I've achieved pretty well, and one that I think I've not achieved very well, to be honest. The one I've achieved pretty well is I've managed to save quite aggressively. I'm pleased with the amount that I've managed to put into investments and stocks and market and emergency fund and various other things like that. So my saving's been good. I count that as a win for the year. The loss side is I also wanted to be a bit more patient with my investing and not trade around so much, or not sell things as much, I guess. Not quite trading. But I'd been a bit impatient with stuff, not held it for very long, and then waited and watched while my thesis nicely played out after I'd abandoned it. And I haven't really managed that, if I'm honest. I'm still doing much too much buying and selling, especially selling, to be honest, because buying happens when it happens. You get dividends every so often. I'm not going to not buy them because that would be additional buyers or something. So, yeah, a win in terms of saving and the amount I've managed to save. Pleased with that. Probably less impressed by my patience that I haven't really developed so well this year.
That's an interesting one, that is. Because if there's anything that I could say about you guys and your investing, I've got plenty of flaws myself, but I would say that you guys, to me, tend to sell a little bit too early. You make some amazing picks, and then you just let them go a little bit early. And I wondered how you felt about these long-term holdings and things. And also, on the other hand, someone, I can't remember who I think it was Seth Klarman I was listening to talk the other day, talking about how he developed the thesis on when he was going to sell before he bought it. So he would decide the conditions of what he would sell before he bought it. That's hit very hard with me, because a lot of my stocks I bought with the plan to never sell. I think that's what I came up with. But it'd be interesting now to think ahead and think of the reasons why I would ever sell a stock. And I'm going to bring that into my thesis a little bit more.
I can tell you why I've been selling too much, for what it's worth, and it's always been the same reason. It's always been, and I've been worse in bear markets than I am in bull markets, actually, which is maybe the wrong way round. You're not supposed to sell when things are going down, but it's always been the case that I've been distracted by the bigger, shinier bargain over here, and thought, I want to buy this thing. I don't have loose cash available. Something's got to go. That thing's up fairly well. What's that going to do? Is it a better thing than that thing? No, I'm going to buy this other shinier bargain over here, which happens much more when everything's going down, right? So I suddenly think, that's a buy now. That is a thing I'm having. Goodbye, other thing. And that happens to me less in bull markets. I don't think, look at that thing go, I've got to get me a part of that. I tend to think I've missed that more than anything else.
Well, there's stocks in my portfolio that I buy for a reason. So when we were in the bear market, I stumbled across Halion, and I stumbled across their brands, and I thought, their blands. There you go. There's an interesting phrase. And there was a lot to like about that company. I thought, hey, look, I could put 1%, 2% of my portfolio into this company. I think it's going to be a little steady Eddie. It'll probably pay me a couple of percent dividend when it starts paying it. Might do some buybacks. It's got to get rid of a little bit of debt. So, I'm expecting a sort of 6 to 8% return from that. And it was up 15% within a month or two. And you think to yourself, well, realistically, look, in my head, that was 2 years return. So at that point, I will realise that profit, even if it continues to go up from that point, and it was just a resetting. That to me is, thesis blown, really. That's not why I wanted to hold the stock. And the same thing, I put some money into BlackRock at the beginning of this year because it had fallen a long way. I was expecting a 10% return out of BlackRock and a couple of percent in dividend. I was up 20% on BlackRock, but I was losing 5% to FX, and I took the profit on that because that is a year's return in a couple of months. So the reason I would do that is because I do have better ideas than BlackRock, and I do have better ideas than Halion, and they're in a significantly worse position. For instance, Steve hears it regularly, and he says, well, you know, I'm in his DMs, and I say, Steve, I want to sell Adobe. And he's saying, well, why do you want to sell Adobe? Well, the reason I want to sell Adobe is because Disney, Google, and Amazon are a lot cheaper than than they have been, and I could make a serious wedge. And I don't want to sell Adobe because I think it's necessarily a bad company. I'm up about 10% on Adobe from its lows, but I could realise that, and I could make big chunks in these best ideas. I was showing Steve the other day. I think I've trebled my Disney position. I've doubled my Google position. I've doubled my Amazon position. I've added to ASML this year. I actually got to average down on ASML, Paul, which might be an interesting fact for you at one point. I was just for one day I was red, and I averaged down. I averaged down by like 0.05% or something. But that's the reason for me. But I misunderstood this question when you pitched it, Paul. So I've got best performer and worst performer for you. So,
okay.
So here goes. I've got LSEG and Southern Copper. They're both up 1.5% on the year. So for me, that is an absolute stinking win. Nice. I also picked Axum Therapeutics in my Capital Incinerator pie, and that's up 150%. So, nice. And I have held on to that one as well, despite it being it's actually an 8% position in that pie, and it's only supposed to be like 2 or 3. My worst performer has been Spotify, and I've got all of this because I bought it in January. It's down 67% year to date. I have bought it a lot more over the period. I only sort of started a position in January at a couple of $100. It's now 70. But I have been buying on the way down. So they're my best and worst moments. I guess if I was going to answer the question as it was intended, I did manage to hold my ISA deposit for the vast majority of the year. I've only got £1,000 left, but I have been putting it in monthly as I said I would. So I nearly did it.
That's good. That's discipline. That's great. It's really good. My win for the year would be that I'm now a year free from my job, and we haven't starved, so I'm doing pretty well. It's a good start. I'm still not counting chickens. There will be a video out about it one day whenever I get the time to start editing again. Yeah, that's been pretty good to break free of the shackles of the 9 to 5 and work 24/7 instead. My biggest loss is a financial one, and I think it's been well covered. I think it's well covered on the Discord as well, is that I sold a lot of my stock for absolutely no reason in the end, and it's really annoying. So I'm now currently trying to find I've got £10,000. I think I'm going to make a video of it where I've got £10,000, and I'm just going to slam that all into certain stocks on the market. We'll do that one day, because I think that's going to be really satisfying for me to do. It's sitting there at that, and I'm going to open up my pie. I'm just going to lump in 10,000 and see where it goes, which would be quite interesting.
Lucky for you, Paul, you've got 6 months worth of stocks for Paul to go through and get all your new stocks from.
Yeah, true. No, I've got a good few on the list. I've already started one, Brookfield Renewable. That's already started. That needs another $3,000 to go straight into it. So that's already started. And there are a couple of others. A couple of REITs that I want to get involved in. I'm going to go against the grain, I think, where people think the REITs aren't going to do very well over the next couple of years. I'm going to go against the grain and get involved in the REITs. Not sure specifically which ones yet, but we'll see. And yeah, in general, we'll just see what's open there on the market.